Good morning, trade pros, and welcome to our morning market update. It is Wednesday, July the 17th, and Wednesday is excited days for me. I wake up Wednesday morning and I say, oh man, it's crude oil inventory day. I'm so excited. There's going to be a huge opportunity today in crude oil after moving a ton yesterday. We'll talk more about that in just a few moments. We got a great update for you today. Let's kick it off with a morning market fun fact. It's a lighthearted fun fact. On this day in 1995, the NASDAQ rose 6.56 points to close at 1,005.89 for the first time ever to cross the 1,000 threshold. The index since then has gained 700%, closing at 8,222.80 on Tuesday. All right, that's a pretty fun morning market fun fact. In today's session, we are walking into the market with some news that came out yesterday, actually, that priced into the afternoon dump. Donald Trump says the trade negotiation with China has a long way to go. The market didn't like that. It was a 5-day rally that went on halt as a result of that. All right, we have some huge quarterly earnings reports. I'm having a hard time talking. They haven't drank much coffee, that's why. Including Netflix, FANG, stocks, Facebook, Apple, Amazon, Netflix, and Google, plus Microsoft account for 17% of the entire S&P 500 market capitalization, which is $26 trillion. All right. So what we see from these big companies will dictate the tone of where we go for the next several weeks. So we're going to see some earnings coming up at the closing bell and through the rest of the week. All right. We'll talk about that tomorrow. There's some regulatory action, some new regulatory action that's opened against Amazon, this time out of Europe. This is making a big splash this morning around trading desks. Prior, Amazon reached a deal with Germany for an antitrust authority to rewrite their third-party terms of service for third-party merchants. All right, and made a similar deal with Austria under a similar probe. All right, well, a new one is now opened by the EU, and this is a huge one. This is one I could tell you for a fact happens. They don't have to do too much digging. This is factual based on my own personal experience, and I'm pretty sure this guy to the right of me will agree, but we'll read it out first. The European Union is basically saying that Amazon's playing a dual role as a merchant and a marketplace. And because they're getting an opportunity to do that, all right, they're looking to see if Amazon is taking merchant sales data, plucking it out, analyzing it, and launching similar products on their own end that compete with their own merchants. All right. These allegations were denied by Nate Sutton, who's the Associate General Counsel. Said Amazon doesn't do that. Yes, Amazon does that. All right. It's a known fact. Ask any merchant with a new product that comes out, and they say, "Hey, my product sold like crazy for the first 3 months, and now it's slowed down." Well, go on Amazon and check if there's a similar one. Yes, fulfilled by Amazon Prime. All right. So this is going to be an interesting case. This is massive for Amazon, and it's just another company that's getting probed as part of a global initiative to look into the big tech industry and their influence. All right, it's an interesting update. It's not going to help Amazon, and I assume the stock will be down today in reaction to that. All right. Also, we're at general all-time highs across the board in equity markets, so you can expect to see some profit taking going on. So a sell wave right now isn't necessarily bearish. It's just profit taking, and there's some sell stops below, and day traders know that. And I think we're headed lower today as a result. All right. This morning at 6:45, Bank of America reported second quarter earnings of 74 cents per share. All right, versus 70 expected. Revenue 23.1 versus 23 billion. And here's the interesting part: net income rose 8% quarter over quarter, but that was on the back of some more aggressive cost cutting. So there's two ways to make money in this world, and we both know the two ways. Number one is make more money, more sales, more revenue, more volume. All right, and way number two is cut your expenses. Take what you're giving out of your pocket and keep more of it in there. However, cost cutting works to a detriment. There's an extent to which you can cost cut that's prudent and good financial management. And then there's a point at which cost cutting today leads to future stifled growth and innovation. All right. So that being said, yes, it's a nice increase on income, but it's on cost cutting. Here's the other really interesting part: the net interest margin, the NIM, which is how banks make money. We've been talking about the NIM all week. with bank earnings. All right, this is the last bank to report. The net interest margin is slimmed lower. It came down 1/10 of $1 billion lower than expected. Huge amount, yes, I know, but when you're dealing with big volume, you make small amounts of return, which is big because you have large size, but your net interest margin is very slim. The profitability, the margin on bank earnings, is so tiny, it's unbelievable. So these net interest margins have compressed. They've dropped from the last quarter. And this really highlights the following. JP Morgan, Wells Fargo, Citigroup, and now Bank of America have all reported lower net interest margins. So given they all beat more or less their earnings per share number, they beat it on cost cutting. And the real underlying factor here of these earnings and what traders and investors are looking at and worries them is the fact that net interest margins are slimming. Because here's the truth. In 4 weeks' time, we're probably going to have a rate cut, either 0.25% or 0.5%, more likely 1/4 from the Federal Reserve. That doesn't help banks. Decreasing rates eat at their NIMs and eat at their profit margin. So if your profit margin's lower, you've got to cost cut more, all right, or make more sales. And what's another avenue for banks to generate more sales and revenue? Fees, all right, services, etc. Introducing new products that charge more fees and services. That's their two sources of revenue. Net interest margin, which is basically the difference between what they borrow and what they lend, and any other service fee generations. So that's Bank of America. It beats the expected earnings per share number, but there's a lot of worries that this report highlights, especially pertaining to the Federal Reserve. So yes, the Fed cutting rates is bullish for the market in the short term. I've always said this, and now banks are showing worry in their balance sheets and income statements. Not on their balance sheet, mostly on their income statements, and what that means for Q3 and Q4. All right, but I still think that bull side is the right side to go. We're just at this point of the cycle, we're a little exhausted and need of a pullback. All right, I feel like a lot of retail traders just got into the long as soon as they hit the new all-time high, and I feel like those stops have to be run before we go higher. All right, sentiment this morning to start the day will be bearish. I'll be looking to sell rallies and see if there's a downside momentum that starts to swing. All right, remember it's summer trading. So if you get short and you get 6-7 ticks, which is 1.5, 2 points maximum S&P, consider yourself lucky. I know amazing traders right now that are just keeping up with summer volatility, breaking even, making a little bit of money, but not what they used to make a couple months ago, a couple weeks ago even. All right, so we have to turn it down a little bit for summer trading. Yesterday we did a great webinar with our elite team, and we showed them how to adjust their trading to summer volatility. I covered day trading. Victoria covered an option strategy. You can get access to that exact webinar if you sign up for Elite today. You can watch it on replay. It's an amazing webinar, I can tell you that much. All right. In today's markets, in Asia, Japan's down 0.3%. Hong Kong's down 0.1%. China's down 0.2%, while India's flat. So slight weakness in Asian markets. In Europe at midday, London's down 0.1. Paris is flat. Frankfurt's flat. In the United States, Dow, S&P, and NASDAQ all up 0.2%. Crude oil overnight manages to gain a little bit of ground, but man, crude oil got hammered yesterday. And the reason it got hit hard, all right, is because Iran appears to be ready, at least for now, to come to the table and start the negotiation process once again with the United States. That's a major risk-off scenario. It's a reduction of risk, and oil had no choice but to sell back down to reprice that news in, all right? In oil, it's one of those markets where you trade the rumor or you buy the rumor and sell the news. All right, by the time the news hits in oil, the oil doesn't give a crap anymore because it's already priced it in. It's a very aggressive market to price in new information. And so by the time there's a deal done, oil will probably blip a little bit, but the majority of the movement's going to happen as these rumors circulate and as progress is being made. All right, you need to know that. That's how oil moves. So we're going to be watching the oil market closely today for one reason. Actually, two reasons. One reason, it's a very volatile asset. Even in the summer, it gives you a lot of opportunity. And so in the summer as a trader, sometimes you have to switch from the instrument you love and you're used to trading to find opportunity in other volatile assets. At the moment, that's gold and that's oil as well. Oil, for that reason, we like it for single-handedly. So I don't have to stare at the S&P 500 and make my eyeballs bleed because it's moving 4 ticks in an hour. We switched to oil. Today, there's another reason to look at oil is the fact that it's a crude oil inventory report at 10:30 in the morning. Yesterday, we had API figures. We'll break that down a little bit later on. But the oil inventory report from the DOE is today at 10:30 And in just 1 hour of one day, you could make an entire week's worth of income, no matter what job you do. All right, you be the CEO of Bank of America, and if you scale up, there's opportunity to outperform that. So that's today at 10:30. We'll be trading that live in our room, and we'll be trading it with Steven, very experienced trader and a phenomenal oil trader, the best one that I personally know. And I know a ton of traders. A lot of traders I know actually struggle with oil because they don't give enough time to it to develop their and hone their craft. Oil as a market works so different than the S&P, right? The S&P, you need patience for a level. You got to wait, see some more information. Just when you have an idea that you want to get into a short, you got to wait a little bit longer, especially in the summer market. Let it marinate a little bit more in the summer. Oil hits your level, and if you ain't in, you missed it. That's what I love about it. It's decisive and it moves. So yeah, if you're wondering, yes, I have a preference for oil, especially in the summer. Gold is down slightly this morning. I had an order below 1,400. Obviously didn't fill. I think 1401.30 was the low print, and now it's bouncing back up about $8 off that level. Bitcoin's down another 12.6%, back below 10,000. All right. This morning we had housing starts. They came out at 1.25 million at 8:30 versus 1.26 expected. Building permits. All right. So this is a forward-looking indicator. It's a leading indicator because this tells you how many building permits were applied for, how many new properties are likely going to be built in the future. It's forward-looking, right? It's construction. It's in line with economic growth. It missed big, 1.22 million versus 1.3. All right, which means building permits plunged 6.1% month over month. It's the sixth consecutive decline. Geez, that's a tongue twister. And the worst drop since March of 2016. That's a stinky number to start the day. All right, and this is happening at the same time as mortgage rates are collapsing. You're having lower cost mortgages, which means more people should be able to borrow. All right, but there's less building permits, which means there isn't as much demand, at least not for new properties. And so that's what's going on here. That's the backdrop, and that's an economic miss on that front this morning. All right, 10:30, we got crude oil inventories. Can't wait to trade them. 10:15, we begin in the trading room to do our preparation. We explain to you how to trade it, all right, how not to trade it, how to set your risk and reward parameters, how to adjust for it, when the algorithms jump in, when you should jump in. All that information is covered on Wednesdays. Great time to check it out and join us in Trade Room today. 12:30, Fed's Esther George speaks on economic outlook, and 2 p.m. Fed's beige book and nothing else. Volatility will be front-loaded today. Expect to see some movement between 9 to 11:30, the European close. Capitol Hill is going to be grilling Google once again, and not from Google, rather Facebook, over their Libra digital currency. It's not exactly a cryptocurrency, but it's a digital currency. They will use a blockchain, so I guess you could call it a crypto, but it's not. And that's going to be going on in the backdrop at the same time. Also, there's legislation where the government's trying to really look into this big tech industry and limit companies $25 billion or above in market cap to participate from banking. They're going to say no banking access if you're a big company, can't compete with the banks. The system is going to protect their own, guys. I mean, that shouldn't come as a surprise to anybody. I'm not surprised. When Libra, the plan came out, I'm like, yeah, good luck. You're going to get a pushback against that. And here it is, pushback against that idea. That's what we got for the morning market update. I'm looking for a downside to sell rallies early on. I'm looking to sell early morning strength, which means I expect weakness. And in the afternoon, I'd be careful today buying weakness. I think we might carry through today. We've had a long period of consolidation now, and I think we're ready to move out of that consolidation through the support to the downside. Have a great day. Take care. I wish you the best. Good luck. Good trading. Manage your risk. Trade with TRADEPRO. See you at 10:30 for oil inventory number. Show up at 10:15 because that's when we start doing the recap. See you guys later. We'll see you inside the room. Take care. Goodbye. All right, Trade Pros, let me unclip this mic. Let's get down to business. We actually have a great day today. There will be more volatility, and we have to prepare for that. So I'm going to start covering the S&P 500, and Victoria will cover NASDAQ, Marky, the Dow, and we'll bring it on to Steven. It's his day of the week to talk about crude oil. All right, so let's get started. I'll kick it off with S&P.